I'm now pleased to welcome Patrick Campos, the Chief Strategy Officer at Securrency, where he guides Securency's commercial and capital strategy, develops strategic initiatives, and much more. Securency automates compliance, streamlines financial transactions, and interconnects markets with open infrastructure. Patrick is going to talk to us about virtual asset infrastructure and how to build rails on which value can be exchanged securely. Patrick, thanks for being with us here today.
Yes, thank you, Jordan. Thank you for that introduction, and thank you to the Stellar Development Foundation for giving us this opportunity to speak here. Securency works very closely with SDF on a number of projects. We're big fans of the technology and even bigger fans of the outstanding SDF team. I'd also like to take a moment to thank our distinguished audience for the opportunity to speak with you, particularly because we have a large number of Ukrainian developers who are incredibly excited about the fact that I'm going to have the opportunity to speak about the great work that they do here. So now I'm trying to flip through the slide. If I can, I'm having a little bit of technical difficulty. There we go. So first, a bit about Securency. We're a blockchain-based fintech and regtech company, really focusing on compliance and interoperability to, as Jordan said, really create a set of rails for the movement of all value, leveraging the power of blockchain. We deliver services in a software as a service and platform as a service model to many customers, a lot of whom are large financial institutions. And of course, our objective is to really leverage the power of blockchain technology to bridge legacy financial services into this next generation technology. A lot of what I'm going to talk about at the beginning, I will move quickly through because Radko and many of the other presenters have already done a very effective job of pointing out the issues, the problems facing legacy financial services around scalability. But I'll move quickly through this because it's important to point out the cost. And this cost, to a large extent, is centered around compliance issues. This might be familiar to many of you. This is one product and about 160 different services here in one product. In our world, again, as pointed out by many of the other presenters, this is one smart contract. And so in a very simple way, this is a visual representation of the complexity that can be really overcome through the use of effective blockchain-based technologies. And of course, we're seeing that. We're seeing that from financial institutions. We're seeing it across, all of the major, financial centers. Securency is a US-based company. We have a large operation in Abu Dhabi. We see these sorts of developments in both places, in Europe and Asia and everywhere around the world. So how do we identify where these solutions are really best placed? Well, if we look at the diagram to the left, that's the world that we live in today. The diagram to the right shows where these problems can be overcome through the use of this new powerful technology. Now, if at the bottom part where we say fintech disruption, there is a lot of work being done here by a number of very, very good companies. But at the top where we say regulatory disruption, there are two ways that you can address this. You can either get all of the regulators to change their regulations and become much more simplified, which is a very difficult challenge when you think about all the different regulatory agencies that are out there, not just in different countries, but even within a country. For example, in the United States, we have many different agencies covering many different activities. But there's another way that this can be addressed, and that is by creating more or less a clearinghouse for market participants, one that recognizes the regulations of all these different jurisdictions and allows transactions to occur in a manner that is compliant with all of those jurisdictions. That's the mission that Securency set out to address, because without doing that, it's very difficult to really address or really capture the efficiencies of blockchain technology. And this, of course, results in a highly scalable system through simplicity. Now, I'll pause on this slide for a moment, because back in 2015, when Securency first started building out this infrastructure, we were viewed as somewhat odd in this space. Most of the work that was being done, if it wasn't around ICOs, it was either building your own blockchain or digging deeper into one particular blockchain or building certain components. But we were building really an end-to-end framework for the movement of digital securities and really of all types of digital value. Now we find ourselves in 2021, and we see that the dominant trend is really that regulated institutions are all adopting digital assets, not just Bitcoin, but digital assets of all type. And it's no longer a question of if. For these major institutions, it's a question of when and how. The other trend that we see is in the crypto community, the winners are really embracing, they're truly embracing the fact that that they need to become more institutionalized. Well, maybe not embracing, maybe they're not doing it as willingly as one might hope, but nonetheless, they're beginning to recognize that this must happen. And the value that can be captured when you bring these two worlds together, the tremendous advances from the crypto community in decentralized finance, or DeFi, and the large number of assets and the institutional experience that you have on the regulated institutional side, you bring those together and you really have a powerful framework for what we call institutional DeFi. That's precisely what we've been doing for 5 years. The market now very much has come to Securency. And so here we are at the right place, at the right time, and with the right technology. And what we see is that again, the crypto players and the digital assets players in this space, who we feel very strongly about, are all recognizing this. So what is it that we built? Well, we built an integrated, scalable, and universal compliance platform with a whole host of financial services. Simply put, using this platform, different financial services participants can transact with each other across a common compliance framework in a multi-jurisdictional setting. And we built supporting financial services, a layer of APIs for easy access. In effect, an entire framework whereby various institutions and investors can come in and participate globally. So what sets us apart? And really it begins with a philosophy, the approach that we have taken to the development of our technology. First, as I've indicated, the most important thing that we look at is a framework that works for the future, that is scalable and accessible, must be open and universal. That means that we said no to walled gardens, whether they be institutional walled gardens or individual ledgers. It's one of the reasons why we spent a lot of time really engaging with the Stellar Development Foundation, because we see the Stellar Ledger as having a tremendous amount of power for financial transactions. What we were able to do with the Stellar Development Foundation is build in some compliance tools, and you can see this in their latest release, to really support the deployment of digital securities on the Stellar Ledger. This means that market participants don't have to be trapped in a single option DLT, which we don't think is the future. And in fact, when we speak with regulators, regulators also agree. If we ask any national regulator, what do you think about the prospect of having trillions of dollars of your nation's economy living on one single distributed ledger? The reaction is always the same. That doesn't make a lot of sense. We need optionality and an open framework. Secondly, of course, real-time settlement through the automation, not just of business logic, which is what we think about with smart contracts, but also the automation of compliance within the same framework. This is very, very important. Of course, interoperability among all of these systems, where reconciliation between different systems, real-time reconciliation, not end of day, not 2 days later, but real-time reconciliation among these different systems is key. And to that end, we took a very unusual architectural decision. We decided to create off-chain control locations. And this was controversial when we started doing it. Most of the regulators with whom we speak now agree that that is the superior model. That's the model that they're looking for, one that gives them comfort. But for market participants, it's also important because it means that we don't have to rely on regulators to be smart contract auditors. They can look at the data where it resides. They can easily audit this information. They can do their jobs as regulators in a simplified way, and market participants can leverage the power of the blockchain. We've also created a common language that we call the finance ontology to make it very easy for market participants to create assets and to deploy them into multiple environments. Next, we believe very strongly in meeting the regulators where you find them. We don't spend our time going to regulators telling them how bad their regulations are and how much they need to change them. Rather, we understand where the regulations are, and we create the tools that allow market participants to comply with those regulations while still operating in a very, very technologically advanced way. To support this, we have again, an off-chain policy enforcement point that we call the compliance oracle. It's supported by a plain language policy editor. So those policies can be created by simply by lawyers, by issuers, by other market participants. It's not limited to coders. It can be audited by people in plain language, in plain vernacular as well. It's a dynamic attributes-based enforcement point. It's not a whitelist, which is very prescriptive and non-scalable, but one that uses an attestation registry or a data oracle to take third-party attestations about individual participants and be able to very quickly clear them in an attributes-based manner while respecting privacy. And finally, a very important point for regulators is the ability for a designated and authorized entity, a transfer agent or a CSD, to claw back and roll back value where there has been a fraudulent or erroneous transaction. Now, this was very controversial in the crypto space, but simply put, it's the key to getting regulators comfortable with the system. It's the key to actual custody. And I'm pleased to say that, thanks to the forward-thinking team over at the Stellar Development Foundation, this capability, while we maintain this off-chain, we have also built it directly into the Stellar Ledger. The next philosophical point is we believe in interconnecting financial networks to create a global liquidity pool. Now, this is very important. While we all want to capture the benefits of decentralization and to some extent disintermediation, regulators still need to look to an entity and to human beings when they regulate. We believe that the future is an interconnection of liquidity pools, where the regulators still have the intermediaries that they point to, but assets in one jurisdiction can be exposed across this entire pool to create greater liquidity. This vision really requires a common compliance framework, which is why we spent so much time developing this. We believe that this system will also preserve client relationships and will expand global access to financial markets. The next philosophical point is that we believe very strongly in balancing oversight and privacy. One of the greatest features of the crypto development is its contribution to financial freedom. And that, of course, is a contribution to human freedom. We believe very strongly in that. At the same time, we believe that these regulations exist for a reason, that investors and societies do need to be protected from nefarious behavior. And so this has to be balanced. And for technologists, all too often, we want to veer toward one side or the other. We either want to say, look, private or regulation and compliance, that's not our issue, that's not our problem. Or we want to say, well, yes, this is massive oversight and it can be abused, but that's not our problem, here's the technology. I think as technologists, we have a responsibility to develop technology that supports this balance. We believe that the net result of all of these developments is a blurring and potentially an elimination of the line between public and private markets. That doesn't mean that we get rid of the investor protections that exist in public markets, for example. Rather, it means that if you can enforce these rules on an attributes-based methodology in real time, then what ends up happening is there can be a global marketplace in which everyone can participate based on their qualifications to transact in a particular asset. And that's the vision that we have for the markets of the future. Finally, a lot of discussion here about central bank digital currencies, and we are certainly big supporters of CBDCs. We believe, though, that wholesale CBDCs can serve a very vital purpose within a society and within a jurisdiction. But we also believe that private sector stablecoins that are interoperable with these CBDCs and interoperable with each other across a common compliance framework not only will encourage and spur more innovation, but actually will protect privacy as well. So that is the philosophical approach that we take to all of this. Finally, I'll end on this note here. As I've indicated, we work very closely with regulators, and we've been asked on more than one occasion by regulators to demonstrate features of this blockchain technology, not just our technology, but blockchain technology generally. But because what they typically want to see are things like, how can rules from different jurisdictions be enforced through an asset in real time as that value moves cross-border. It turns out that our technology is uniquely suited for this type of demonstration. So we have, with 3 major regulatory agencies around the world, demonstrated, for example, cross-border transaction and compliance policy enforcement, both in primary and secondary markets. And we've also demonstrated how our off-chain and hybrid off-chain, on-chain good control location will support world-class custody and transaction reversibility. There are future phases. We've been asked to provide additional demonstrations to them. And of course, we're more than happy to work with regulators, including regulators in the Ukraine if we're asked to demonstrate these features. In addition to that, a lot of work has been done around compliance with recent financial action task force requirements around the travel rule, and the same in the US with FinCEN and other jurisdictions. And so again, drawing on our philosophy of protecting privacy while ensuring investor protection and good orderly markets, we are developing very unique technology in conjunction with a regulatory authority for compliance with travel rule requirements. So that's a brief overview, and I'm happy to have had this opportunity to speak with you. I encourage you to reach out with any questions that you may have. And with that, Jordan, back over to you. Thank you.
Great, Patrick. Thank you so much. It was really an informative overview. If you don't mind, I'll throw a couple of questions at you. You mentioned that you do interact with regulators. Can you tell us a little bit more about those conversations, and in particular, the perception of institutional DeFi in terms of the perspectives you've heard?
Sure, that's a great question. And I'll start with what perhaps is a strong and controversial statement, that the notion that regulators will ever get comfortable with a piece of code that being the intermediary and no human being in the process, I think is fanciful. I think that and regulators, even the most progressive regulators you'll hear out there, like Commissioner Peirce at the SEC, will say, I have some questions about this, with good reason. Now, what we really want to do is we want to minimize the number of intermediaries or rent seekers out there. And in point of fact, we want to leverage, the power of that code. But what we hear from regulators is very clearly, somebody needs to be responsible. And even if you tell me that the blockchain can instantly clear and settle, I still want to know who's responsible for settlement. And so if you can't answer that question for a regulator, you'll have a very difficult time. We think we have some good answers, but that's what we hear.
Got it. That makes sense. You made a couple references to some real world use cases in which you're working on today. So you stole part of my question, but the other part is still there, which is how far are they from being live and in use? Like, what does that path look like?
You mean
for the use cases that you guys are working on today? You mentioned you're working with a few other companies or organizations.
Sure. So we're pretty close with, for example, we do a lot of work with WisdomTree, which is a large asset manager in the US. And really, you're primarily known for their ETFs and ETPs. We are well down the road on a couple of products, and this is public information. They're working on a gold product, and also what we believe will be the first of its kind. It's a 40s Act instrument, and it's working its way through the SEC right now for approval. We're very optimistic that will move through very quickly. It's hard to predict, but we think maybe in the next 6 months or so, we'll be able to see this type of thing come to market. So that's happening now. The work that we're doing with institutions really covers a broad range of areas, custody being one of them. And a lot of what we're doing is creating sub-custodial solutions for them. And those take a long time in terms of coming to market, but it's actually not too heavy a lift in terms of connecting the crypto technology into their technology using our framework. So we're doing a lot of that and things around lending and collateral, things like that. So those they develop initially as POCs, but we think they'll come to market in the next, again, 6 months to a year, something like that.
Great. One last question. I mean, overall, how do you see DeFi interacting with traditional finance sort of over time?
Yeah, super question. So there's a graphic, and I wish I had put it up here, but it shows the value. And look, DeFi, it's gone from 1 or 2 billion, total value locked a year ago to over 100 billion, and that's a dramatic increase. But 100 billion in the traditional equities market, the traditional debt market, it's a drop in the ocean. If you can bring all of those traditional assets and leverage the power of these protocols and do it in a compliant manner, you see the way that the DeFi market has really accelerated. I think that you could see exponential growth when you bring real world assets. And so for that, again, there's no getting around it. It's all about compliance. It's all around, and also systems being able to speak to each other. So, back to our mantras, compliance and interoperability.
Yeah, that sounds familiar. So Patrick, it was really insightful. Thanks so much for a great presentation and taking some questions.
Thank you, Jordan. Thanks for having me. And thank you to the audience.